Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. I'm back after a small break, basically just refining a few of my processes. Just been going over basically a few of my longer term trading strategies and revisiting a few and refining some older strategies that I've been doing for years and trying to convert that into something that I can share publicly. Because there is a swing trading strategy that I used to do very frequently using a paid for indicator called the Martin Trend Trader. I'm not sure if anyone out there recognizes it. It's basically just a parabolic SAR indicator that changes the color of the candles, but also gives you profit points, re-entry points, and I guess a trend meter down the bottom, I suppose. But I found the profit points and entry points are they're okay, but they're not the best. And I also found the parabolic SAR's entry to be really far from ideal. So basically I have, with my day trading strategies that I've recently acquired, have begun to refine my longer term swing trading strategies. And these are low stress, much lower stress, I should say. And you can have a few of these on the go in various accounts or sub accounts while still having your day trading going. So if maybe your day trading is not going so well and you've got a couple of swing trades, medium and long-term swing trades on the go, and some spot, I guess, on the side, you've got all bases covered, I guess. That's kind of the main thing, right? So it means you've got, for example, right now I have a long-term swing trading strategy on the daily on Ethereum, and I'm going to show you that shortly. And that's using this Martin Trend Trader, but I've converted it into something that anyone can add to their charts because it's only 3 indicators. So it means that you can add it even on the free account, which I believe is 3 indicators. It could be 2, I'm not really sure. I haven't been free for a long time, but anyway, you can always check on TradingView and see if it works. So this is an Ethereum daily long-term swing trading strategy using the Parabolic SAR, and then basically you wait for the trade to flip to long or short, and then you wait for a retest of the 21 period smooth moving average. I will cover each one of these in a separate video so I can try and keep it short, because I don't want to waste your time, and it gives you time to basically go and back test these strategies on some assets that maybe you want to trade. So anyway, let's get into the video. Rightio. So I guess excuse the chart, I suppose, because maybe it looks messy to you, but I guess because I look at it all the time, it looks kind of normal to me. It's just a series of, retail lines to see what retail traders are looking at, basically. And then I've got on here the Martin Trend Trader I mentioned before. I've got the TDSS9 by Tom DeMark. I just kind of like to see where these 9 signals are, basically, on this, just so I can see maybe where bottoms could be. So maybe I could take some profit if I'm in a longer term swing trade, basically. So just so you know, this is on the daily on Ethereum. So, we're talking pretty long periods of time here. So let's have a quick look here. So far, this has been flipped, not been in the trade, which I'll get to in a sec, but this has been flipped for almost 30 days. And then the time before that flipped, and again, not in the trade, and I'll explain a little more shortly, was 38 days. Come up here, the flip was up here, and that was 92 days. Now, unfortunately for me, I did not take this trade here, which seems pretty ludicrous, right? And I did not take this trade either, because I had 2 subsequent losses here and here. And to be honest, I lost quite a bit of money. And also there was one here and here that I lost as well. And I got really just fed up and frustrated with this, because all I was doing with this strategy, and this is basically how this strategy is meant to be, is just flipping long immediately or flipping short immediately when the indicator told me to. And that's how this strategy works. I've had this indicator, I bought it for about $300 US back in 2019, and I've been using it ever since. I was using it on the 4 hour for about a year, found it too choppy. And this is back in 2019, this is a while ago. I found it a bit too choppy, like it would get me in decent trades and then it would chop me out in consolidation and basically kind of break me even just a little above, I suppose. You know, and I kind of got a bit fed up of this, and I was, you know, doing other things anyway with yield farming and buying and holding. And I guess, you know, at this stage, I didn't quite realize we were in the bear market yet, right? I thought, hey, we're above the 200 moving average. This is on Ethereum, I guess, like Bitcoin's a whole different story. But anyway, it was just basically like, nah, we'll probably end up going back up, I suppose, you know, although it was quite a bit of time after this. But anyway, so, you know, if you go back and have a look, you get some pretty decent moves, you know, if you just flip and then move up. So I used this indicator just straight up, jumping in and out, and then just sort of taking profit points every time I had $1,000 profit. So basically what I had is I had a quant zone bot, which I think I said last time I made a video that I would basically show a few quant zone bot strategies, but haven't done that yet. I'll do it soon. I don't know how many people really are that interested in that, so I guess that's probably why I'm sort of leaving it until a little later to do, I suppose, and just kind of covering some of the more important stuff first, like, you know, a few really helpful, hopefully, swing trading strategies, not financial advice, obviously. But basically, you can see that when I was using this last year, sorry, in 2019, it was around the Q4. So around Q4, I decided to flip to using the daily instead of the 4 hour. I'm not even going to bother showing you the 4 hour. It had some really terrible trades, and I was using it all year. There were some good ones, and then there were some really bad ones. And I was just, again, entering exactly on the Parabolic SAR flip. I was using the Coinbase chart because it, you know, gave slightly better entries. But to be honest, I think that the entries on Parabolic SAR flips are pretty bad overall. They're okay. So for example, here after the pandemic crash, you know, we had, if you just flipped immediately, which I did, I was in a hotel in Hong Kong doing quarantine because I was going overseas to Europe just before all the COVID stuff was going down, and I was in this long here since January, basically. Anyway, I got in on this on Ethereum, shorted it 52. It was pretty good. I was taking profit along the way, and then got out around here. So anyway, as you can see, like, you get some good trades essentially if you just get straight in, you know, if you just flipped or took profit, you know, at certain points, then kind of works. It worked very well for me in 2020, at the end of 2020, where I just basically was just getting in on these. Basically, I think I got in on this one. It was getting on candle close. It's the other thing as well. So I was getting in like here, and then I lost, you know, 13% there. But yeah, this was really nice. This set me up for the entire 2022. This move here that I got in on in October was a pretty big, long position, and I just held on for most of this, basically, because what I was doing is taking 10% of my profit, 10% at like $1,000 intervals of profit, essentially, and then leaving the last 20% on the table until the flip, essentially. Anyway, I should actually just show you like this, because this is how this strategy was. I don't think I was even using TDSS9 in 2019. I certainly was not using the moving averages. This is what my chart looked like, essentially, and has, you know, the profit points and all that sort of stuff. Sure, like profit point, re-entry, all that sort of stuff. But yeah, this is pretty much what my chart looked like. I had no idea where to take profit or anything like that. I was just like, okay, I'll take profit at like $1,000 intervals. Yeah, okay, cool. That was all good there. That was all, I guess it was fine there. I mean, you can see overall it's pretty good, pretty solid strategy. You can see this gray line. It's just like, that's a Parabolic SAR line, basically. And as soon as it basically crosses, it never repaints as well, but as soon as it crosses, it changes the bar color to the opposite side. So, for example, the entry point was there, and then got it immediately. Was sweating because it almost flipped and like lost me 20%. Because I didn't know what else to do. I was just entering and exiting, essentially. But overall it worked pretty well. You know, got in on this. That was pretty nice. That gave me a lot of extra cash flow to start entering spot. Kind of funny. This is almost just like my journey of trading in 2019 and 2020. But anyway, I used profit from this to buy some ish coins. I don't know what you want to say. Basically things like Safe Moon, Poge, and a bunch of other random things, which probably worked out pretty well. But there were a whole bunch where I sank a lot of my profit into and they just kind of disappeared. So probably wasn't ideal, but you know, you gotta like test this stuff out. You don't know if it's what's gonna work and what will and what won't work. So I gave it a crack, and Safe Moon worked out. The rest did not. And a lot of the profit from Safe Moon actually moved into Solana, Atom, and Nia protocols, as well as a whole bunch into DeFi, into things like rebase tokens, which all pretty much went to zero. So anyway, that was all paid for by my swing trading, basically. So it gave me, I guess, an excessive amount of capital to kind of just throw at things and test. Because I think otherwise, if I was just working full time and, you know, grinding away, I don't think I would have done all that stuff and learnt what I learned. Basically, I would have been a lot more risk averse. Whereas because of the swing trading strategy, I guess it allowed me to be a little bit more reckless, because this was really nice, I guess. So anyway, that's what this strategy was. It was basically just enter, take profit. It was basically, I had the bot that reduced my position size to the original position size that I opened in. Basically, as soon as it got to $1,000 profit, it took that profit off and returned me back to my initial trade size, which was usually about $40,000-$50,000. So basically, as soon as it was $1,000 profit, it would just basically sell that off, at least in the long case, or buy that up in the short case and get me back up. So it would, my break-even point would just constantly be moving further and further away from price and giving me more safety until it was risk-free, and then eventually it was just pure profit, essentially. In terms of having a stop loss in, I often didn't have one. I would just, because it's candle close, and so if you had a stop loss like right here, for example, it would like trigger, and then you would be down here on a short, and then it would come up here. So I used to trail the stop loss up, like back in 2019 on the 4-hour, and I got faked out a few times, and it was just really annoying. So I just ended up not using stop losses. And in circumstances like this, it actually would have been better if I had a stop loss. But anyway, I stopped using this strategy here at the top of the bull market, basically last year. After this, and then after those two, I think I got into a very small trade here, and I was like, okay, because I was like, you're supposed to not do that. You're supposed to actually just stay in and create the same size position every time. But that kind of shook me out a fair bit, lost me quite a bit of money. And then I got into a smaller position size there, which you're not meant to do, because again, when I first started using this strategy, I would, again, this is when I was using the 4-hour candlesticks, I would basically, you know, open up positions with small amounts and then aggressively take profit and then end up closing before the flip or whatever. And then, you know, doing that again, essentially, let's say, for example, where can I find, this is the SOL. This is the FTX chart, so I guess this is a good example. You know, I went in with a small amount of capital here to test it. It worked out really well. I ended up closing prematurely, for example, and I was like, all right, I'll stay in the whole time next time. But I'm still testing this, so I don't know, and I'll just enter a small amount or whatever and test, which is probably safe and smart anyway. And then I did a small amount there, and I was like, all right, cool, you know, we've got this. And then I went in hard. I basically got stopped out with a massive loss, like here, for example. I think it was like buy to sell, and so it was a 20% loss. And I was like, yeah, okay, well, I got to stick to the strategy. And then like did the same thing here, stopped out, and then I was like, what do I do? So, you know, and then I did that again, and that happened. So anyway, that's the sort of thing that can happen. You are supposed to stick to the strategy. That sort of stuff can happen with something so basic and mechanical. But anyway, that's the thing that happens. You've got to stick to the same trade size. Otherwise, you know, because this was 69, for example. If you just went entry to exit, that's your entry there to exit without any of the profit points in between. 74, for example, 74, then, you know, 39, 40, 27. Then, for example, you lose, how much? You lose 19, 12, 10. You're still up overall, but it's pretty savage. So I guess the moral of this particular part of the video is when you are happy with the strategy, you must test it for a decent period of time with the exact same amount of capital. They say at least 100 days or 90 days. Keeping in mind, I guess, that this was 230 days. So, you know, That's the 100 days where it worked, I guess. So anyway, this is not a day trading strategy. This is swing trading. So anyway, again, back to this strategy. So basically, long and short is I missed out because I didn't stick to this strategy, which is, I think, fair enough because of this and then this. Sorry, I'm just trying to hide this so you can basically just see the chart as I was seeing it at the time, basically. So I'll just hide drawings, I guess. I was doing some trend lines and stuff like that as well. You know, that's quite obvious because I like to do TA. But yes, anyway. So, and horizontal support and resistances for profit points as well. Not just the algorithm doing its thing. But yeah, so again, I reduced the size of the position for this. And then I was like, oh, well, I barely kind of made my money back from what I lost here. And then it was like, all right, went in long here, stopped out there, then went short there, stopped out there, and that was crazy. And I was like, I'm done. I'm not doing this anymore. It's not working. And then there was a break even there, or at least a small profit, I suppose, 32% on that little attempt. But then it was a rejection of the 21 EMA, basically, which is like, that's basically a telltale sign that we're in the bear market, is that we get below the bull market support band, as it's called by Benjamin Cohen. And you can see it here if I just quickly, we're about to break it down. It's not looking good on this chart anyway, but there's the bull market support band. Let me just quickly bring it up on Ethereum. So it was around here. So where we got above it, rejected, closed back below it. I mean, that's also another thing. That's a 3-line strike. Look at this. Bullish candle, bullish candle, bullish candle, engulfing candle, taking out this one and closing below this 21 period. This is very bearish. Very, very, very bearish. This is also very bearish. Look at this. 3-line strike. 1, 2, 3, 4, 5, 6 bullish candles, and then a bearish candle engulfing both of these two weeks. This is a weekly, on the weekly chart. And 3-line strikes bouncing off 21s are incredibly strong. So anyway, that was around here. I didn't look at this. I didn't see this. I just was like sick of losing money, so I just ignored it. And so as a result, I missed out on this. And let's just do a drawdown. 117%, that's just entry to exit. Bottom to top, it's 270%. And also missed out on this, which was and if I just did candle close to the top, that's only 28%. However, I have a modification to this strategy now. And I'm in this short now, right? And yeah, it doesn't look very good because, I mean, I was also getting a little nervous here because look at it, almost flipped. But basically, you know, if you went from short from here to there, then you're still up 17%. However, my entry is here. So I'm actually up 27%. And with my new strategy, my entry would have been here. So here to the top, 46%. New strategy, entry was here, 72%. No, that's not drawdown. That's not drawdown. That's 253%. Now let me explain what this new strategy is. And this is basically where I add the TMA overlay, which is a series of 3 moving averages and shows you engulfing candles, both 3-line strikes and bullish or bearish engulfing candles. The thing I love about this is the moving averages. So there's simple moving averages. So there's the 21, the 50, the 100, and the 200. And you can just basically bring this indicator up by pressing the other slash, not that one, just typing in TMA. It's TMA overlay, basically. And yeah, it's just basically a bunch of moving averages. But it's great. It's very, very handy because it shows you rejections. It shows you basically points where we will most likely bounce off of and reject from and all that sort of stuff. So, you know, you're going to get better entries essentially. So rather than entering immediately, you wait for a retest of the 21 moving average, which the prices is like, it gravitates to the 21 period moving average. It's almost uncanny. Sometimes it stops a little short though, so you do have to kind of front run them, admittedly, but for the most part, you get in perfect every time. In fact, in this case, if we have a look at the most recent trade entry, which I am still in, but I've taken, I think, most of the profit off the table for the time being. But for example, I was able to get almost 10% better position, or right about 8% position size. And also I added additional to the trade at the next moving average, which, you know, for a few days there, I was pretty under, and I had a stop loss in up here at the top of this candle because, again, and I was kind of lucky that I did that and didn't move it to here because that was taken out, but that was a fake out because of the merge. So this is the power of narratives in crypto, is it can really push things up significantly, right? So this strategy, okay, so this is what I've added. I also added the an RSI that shows divergences and a stochastic, CM stochastic that shows you when prices crossed above or below the overbought and oversold lines, which in this case worked pretty well for me to add to my position, which was here. So I added to my position there, just had a limit sell added there, and then basically took a little bit of profit here. And then I've taken some profit on this candle, and now I've just taken a little bit more profit today because it's TDSS known. Now, basically the way I've got this strategy working is, again, like maybe you're thinking to yourself right now, why do I care about this? I can't buy this indicator anymore. Yeah, it doesn't exist anymore. Like the guy who made it, someone called him out that it was just a Parabolic SAR essentially, and he was trying to sell it, and basically he kind of disappeared, and he's doing another YouTube channel now, but I'm not going to mention it because I don't want to throw him under the bus here. But basically you can build this without paying a cent, and I'll just show you the basics essentially, and we can go from there. But for this one, I was watching this trade take place, and I was just like, when I was looking at this, I had just been learning more about using these smooth moving averages from day trading, and then I was like, why don't I just apply this to longer term trading as well? And it's crazy. So basically the idea is these are active as profit points essentially. So this trade here, entry, profit point there, down 25%. And the other thing you watch out for profit points are 3-line strikes in the other direction. So there was another one there. And then breaks of these lines basically are really good points to take profit on again. So if it breaks out here, doesn't even hold these as support, and you're just sitting there waiting to see what happens, I would aggressively take profit here because that's a breakout and a retest. I would even take profit there as well, and then possibly close it there. I'm not really sure. Leave 20% on the table perhaps. I'm not really sure. Just leave a little bit run just in case. But yeah, you've already taken a whole bunch off the table through this entire run, 17, 25, for example. So I was watching this play out, and I was like, and I saw it like after I started learning more about day trading, and this particular strategy was around here, I guess. And I was learning a whole bunch of different strategies. So I was trying to work out what works, what doesn't work, and all that. So, here I am now with my post-mortem, so to speak, essentially. And after having a look around, here is the rebuilt version, essentially. So here it is there. Basically, it's the same thing. It's the Parabolic SAR, basically with the TMA overlay. And that's just the 3. And you can do the things like adding the CM stochastic, for example, which I haven't done, but CMSTOCH multi-time frame. This is the one that basically shows you overbought, oversold regions on the stochastic RSI. So as you can see here, this was the entry. These were profit points here. So long entry here at 1401. How good is that? Look at that long entry. For first profit point at 1752 on the 50-day. And just to confirm here, I've got my colors set to white, blue, purple, and red. And I've got all engulfing candles shown because it's kind of good to know. What I really care about is 3-line strikes, especially off of moving averages or significant levels. Like a 3-line strike off of a horizontal support and resistance, for example. So here you've got several touches on this line here. So you establish this as a horizontal support and resistance. So maybe you didn't establish it properly there, but by here you would definitely have established it. But even if you went long from this 3-line strike to this 3-line strike, that's still 4% or thereabouts, which is pretty good, sort of, not that much, but anyway. But this is established at this stage. So if you saw this 3-line strike here and you went long, for example, took profit there at the first profit point, took profit here at the next profit point. It didn't quite get to the 100 moving average, unfortunately. It basically got rejected from the 8-hour 200. So yeah, but basically, yeah, I'm pretty sure better thing to look at in this case, instead of the 8-hour smooth moving average, is the bull market support band, which, as I showed before, was around here. So if you were in long from down here, you'd be looking at the weekly 21 and 20 basically as a significant level where things probably would reject from. Because if we have a look here on the smooth moving averages, it actually never got to any of the smooth moving averages on the weekly because they are smooth. You get fewer touches basically. You have to get a lot more momentum for it to get there. Anyway, So sorry if this video comes across as me like kind of rambling and like going around in circles. I'm really sorry, but I'm just trying to cover everything, I suppose. So basically the indicators in question is the PSAR buy and sell, which is PSAR buy and sell. And look who it's by. It's by Kryptolytix, and that guy's a legend. I already used another indicator by Kryptolytix. So anyway, it's the Kryptolytix Parabolic SAR buy and sell, and then the TMA overlay. Again, you just type in TMA. And what I've added on here as well is just a SAR, essentially. And you just type in SAR, so Parabolic SAR, and just add that. This is so you can see the actual line, because unfortunately Kryptolytix code doesn't actually include a line, so you can't really see. You want to actually kind of know where it's going to flip. You don't want to just be like looking at the chart sort of not knowing what's happening and just being like, I don't know, like maybe it's going to flip soon, maybe it won't. I like to be able to see why it's going to flip when it flips, so you're not just unexpectedly caught out, which is basically, there's another strategy, which a longer medium term strategy, which I've put on my channel in the past, which doesn't have the line that shows you when things are going to flip, so you don't really know when it's going to flip. You just have to wait for the signal. I much prefer to see in advance, basically when things are going to change on me in advance, like well and truly before. Like I just like that foresight. So you add the PSAR, and basically here are the settings. They are different to the stock settings, and this only works on Ethereum on the daily. So you can try it on other charts if you want, but from what I can see, from what I've seen, it works best on Ethereum on the daily, essentially. So the settings are: start is 0.015, 0.01 for increment, 0.025 for max value. I'm going to put these values down below. Please copy these and put these in both this and the Kryptolytix Parabolic SAR buy and sell alerts. And then the other thing you can do as well is add an alert. So the way you do it is buy and sell here, and then once per bar close, because you would enter on close technically, but we're not going to do that because I'm going to show you where you enter. But you still want an alert so you know whether to do it, and you just basically go, for example, ETH, PSAR, long trade, for example. So yep, you just set yourself an alert, basically, so you can see, okay, it's time to start getting ready, right? And basically what the strategy is you're waiting for a retest of the closest moving average, right? Especially the 21, to be honest, but the closest moving average, that's your best bet. And then you're taking profit at future moving averages, and also things like 3-line strikes. And if you are like me and looking at things also like divergences on the RSI or stochastic flips in oversold and overbought territory, then you can take those as profit points. But yeah, like it depends on how much you're taking off the table, to be honest. But if you took some profit here, I guess that was also in line with this moving average. Not too bad. If you took some profit here, well, I mean, it's kind of the same, isn't it, as taking it here? Maybe you took a little bit there, maybe you took a little bit there, maybe you took some here, and then by the time you get down here, well, that's pretty much it. Like, that's the trend coming back down. You're getting awfully close to here. So this is why having this Parabolic SAR line in, you are starting to prepare. And if you used this Martin trend trader, then you would have re-entered here and then basically closed there. So the re-entries aren't that great. That profit point was pretty solid. Yeah, if you wanted to re-enter here, maybe that was good, I guess. Profit point here, probably pretty good, but you know, you would have taken in a similar place if you were taking these. But this 3-line strike was the best. That was the best kind of turnaround of the trend, because you could see here, stochastic flipped. This is a confluence. This is what confluence is, when you see two things. Stochastic flipped, and then the 3-line strike, and basically that was it. And so another thing as well is when I saw this short as well. So I saw this short and I was like, all right, cool, let's get in on the 21. And then I saw this 3-line strike, this bullish 3-line strike, and I was like, the merge is happening. So I think we're going to get a run up. And we did, because I saw this 3-line strike and I was like, okay, we're going to get a run up, because we also hit a horizontal support and resistance, which was right here. You can just kind of map them out pretty easily. So we had to bounce off a horizontal support and resistance, 3-line strike, and it was just basically like, well, yep, now it's time. Like, I was going to wait anyway, because I changed the strategy to only enter on the 21. I did back testing, checked it all out. I was like, that could have saved me from up here, you know, for example. If I basically, instead of getting in immediately here, okay, on this is a long, right? So, and then basically if I just had a stop loss like a lot closer, for example, like look for structure and stop loss, and that would stop me out there, I guess. I think this one I couldn't save myself from, right? That's the thing. But for example, here, this short trade here. So this was just, I was damned if I did, I damned if I didn't, or if I just, you know, had the nerve, and I don't know if I would have had the nerve, but when you're dealing with consolidation and when you've got moving averages flipping around up and down and in and out around each other, you're going to get consolidation. You're going to get a range. You're going to get potentially chewed up and spat out. And that's just how it is, right? So you can have a little bit more confidence when you get all these dancing moving averages on the daily that you're going to probably go back up and retest some levels. So if you had the nerve, which I don't know if I do necessarily, but if you had the nerve and you went in long here, so basically actually pretty much where it told me to, and then, you know, it went down, basically flipped, and you just waited for the next 21 period to flip to short. Well, instead of being down 18%, you'd only be down 7%. And then you would have flipped short here instead of down here, and then taken profit at the 200, essentially, and then maybe, I don't know, wherever. Doesn't matter. You just kind of probably would have been a bit more trigger happy with profit points, I guess, after something like that. But anyway, so here is like things are going to go wrong because, you know, you're in consolidation. You know, these moving averages, look at them. They're just twisting and turning and like contorting and doing crazy stuff. This is going to be a terrible period for trading in general. You're going to get a lot of false signals. Whereas, you know, when things are expanded, you're in a trend. Clearly, it's either up or it's down. You're going to get much clearer signals, so on and so forth. I think it would have been better if, say, for example, here. So there was the short there, went down, and, you know, maybe you can take it there because you're on the moving average, but you wait for the 21, for example, there, and then take profit there on the next moving average sort of thing. I don't know, it's just a bit better than just here because your entry would be there instead. Again, just a bit better here, short, right? And then there was an extra 7%, but if you waited and you had the nerve, you would have broken even because there was the flip there. So again, short, then it went against you, flipped, long. I mean, that's like instead of this like losing me money, I would be just break even. I'd be like, I don't care, cool. And then flip to short. So instead of down here, you flip to short here, stop loss above structure, and then boom. So that would have been a break even. That would have been a break even. Short there, down. Like, how much better is that, right? And again, you have to have the nerve to accept that, yeah, like this might just run, but then you will have to put your stop loss somewhere, right? Where I guess if you did, for example, short here and put your stop loss there, well, you wouldn't have stopped out there, so that would have kind of sucked. So I guess there's that. I suppose you would have had to put your stop loss up here and then moved it down here and then, you know, flip position, so on and so forth. One thing I've learned recently is I've been putting my stop losses way too close to some things, some areas, rather than waiting for the new structure low to form to move the stop loss down. So for example, if you went short here and you had your stop loss there, you don't move your stop loss until you form a new lower low. And when there's a new lower low, then you move your stop loss to that structure there. Then you form a new lower low like here, for example, and then you move your stop loss to this structure here. That's the best way to move stop losses is when there's a new low printed, at least on a short. Then you move it to that like last swing, that last structure, and then basically do it that way. And that way you're a lot closer than the Parabolic SAR. So yeah, anyway, some extra little bit of information there, but basically, so this is the same thing as the Martin Trend Trader essentially, daily. So you enter on, for example, as I showed before, so you got the Parabolic SAR line, you can see that's where the trade will flip. And then basically, in this case, I entered here, 16.18. I was very patient. It missed here because I didn't move my entry, and I missed here, but I was just like, doesn't matter because we've got the merge, things are probably going to go up. I actually had a long in on this 3-line strike because I was like, yeah, it's going to go up probably. So I went long here. Again, this is why it's great to know these 3-line strikes and these moving averages. It's because it's like, well, you can be more patient because you just know things are probably going to run a bit. So basically on the 21, I entered basically the short position, and then I added to the short position on the 50. So yes, I was quite underwater at this stage and hearing a lot of news that Ethereum was going to the moon basically. And this is the thing about narratives and news and stuff like that. And basically it's this whole concept of a technical analyst doesn't really follow the news. A technical analyst basically says, show me the charts and I'll tell you the news, right? So we do have strong narratives in crypto, especially with altcoins and stuff like that, that can send things going crazy. But stuff that's more established like Ethereum and Bitcoin, well, yes, they are narrative driven, but they also follow trend and just obey structure relatively well. Well, Bitcoin's pretty crazy, it butts all the time. I like Ethereum better with structure. Actually, in terms of structure, my favorite is definitely Solana. Anyway, so this is how this trade has played out. I'm still in it. I have been taking profit. So basically, as you can see with these little flags, they show the short entry, added to short, took profit at the 21 SMMA, that means smooth moving average. So, and I had my stop loss at the top of this candle. And I'm lucky I didn't put it here because it would stop me out and I would have been like, But I knew the merge was going to push things up, especially looking at this. I was like, okay, we're getting pretty overheated. We're in the bull market support band, or bear market resistance band as it's known in a bear market. So I was just like, I'm not that worried, a little bit, not too much. But as soon as we came back down here, took a little bit of profit there. There was the horizontal support and resistance line down here, took more profit here, essentially, on this trade. And the other thing as well is the TDSS9 that's just printed, which you can always add to your chart, which I've got on this one, which I took this morning, my time, or probably if I think it's like candle, it's pretty much UTC 0 is my 10 a.m. or thereabouts. So took a little bit more profit there. So I'm sitting in a small position right now compared to what it was. It's relatively large up here. I did kind of aggressively take some profit after this because I was like, I don't really know what's going to happen. We might get some crazy moves, but in the past, I never really followed the news. So all this like FOMC and Fed and all this other stuff I didn't really care about. And it was a much better life because now I'm following all this macroeconomic news stuff. It's giving me more reasons to close large portions of my trade prematurely. So this is kind of like why I'm kind of thinking maybe it's better if I step away from that a little bit, because I made much better trade decisions when I was purely technical. And now that I'm fundamental as well, I don't make as good trade decisions. Like, for example, on this strategy, I decided to stick to this kind of relaxed profit point taking. But on a future strategy, I'm going to show you, I was looking at a lot of lines, a lot of news, and aggressively closing large portions of my trade prematurely, and then it would just run. So, I mean, you know, it's all a learning experience. And I guess when you're testing a new strategy, you probably have to be more aggressive with the profit taking, because it could just turn around because you haven't really, I mean, even if it backtests well, things can sort of not work out as well. So anyway, I'm very keen to show that strategy next. But for now, it's just this Parabolic SAR on Ethereum on the daily. Again, it's a combination of a few. So, or for example, I've got the bull market support band on here as well. If you got the pro version, you can add extra indicators. So that way you kind of know, for example, yeah, we're overheated here, start taking a decent amount of profit, right? Or we're overheated here, don't sweat, things will probably turn around soon, right? That's why having this, because the smooth moving averages basically are really smooth. So when you look at normal EMAs and SMAs, they're a lot closer. These are a lot further away from price, but they still, the 21 especially, is still quite well respected. And on lower time frames, these smooth moving averages are great. But hey, they're good here too, basically. One thing I like about this indicator as well, the TMA, is it gives you this cloud that shows you the trend. So if it's green below price, then that means you're above the 200 period smooth moving average, which means you are in a bull market because we're on the daily. So we're talking about like long periods of time here. And if it's red above the price, it means you're below the 200 period moving average. So this is a nice, quick and easy way to see, you know, what kind of trend we're in, for example. So, you know, above the 200 smooth moving average on the daily. Let me just hide this again because I don't really need it right now. Bull market. Yeah, clearly bull market. Bull market, bull market, bull market. Very bull market. Even May Day last year, still bull market, bull market, bull market. And then January this year, bear market. Yeah. Consolidation as we try and figure out what market we're in. Are we in bull market? Are we in bear market? We're bearish, we're bullish, bearish, bullish, bearish, bullish, reject, bearish. Especially pulled this far away. Rejection, pulled this far away. That's bear market. So where are we now? We're in a bear market. Clearly, I don't think I have to tell you that. There's people out there that are probably like, it's a bull market. It's just, you know, a bearish trend. Sure, I agree with that. We're in a perpetual growth cycle or curve where we're just perpetually growing forever, essentially. But, you know, this is a bear market right now. It is what it is. So that's pretty much it, to be honest. This is the strategy, essentially. I know it works because I've been using this Parabolic SAR for years, and adding this extra step to it just gives much better entries and much better profit points. Essentially, you're not re-entering per se like the original indicator lets you do, where it basically gives you some re-entry signals or whatever. But yeah, I mean, for example, you know, just taking a couple of long trades here. If you got in there, I mean, it went down subsequently like 14%. Whereas if you just waited and you got in here, the most ever went against you is 10, is like 9% or whatever. But again, you're above the moving averages, so you don't really know where to take profit. Well, you just take a little bit at each 3-line strike maybe. You could have re-entered at this 3-line strike because it's a bounce up to 21. So maybe end and re-enter here. And then you take more off the table here at this 3-line strike, you know, for example. So instead of entering here, you're entering at the retest of the 21, taking profit there, taking profit there. Do you have anywhere to re-enter? Not really. Maybe here, if you see an engulfing candle rejecting for the 21, maybe re-enter here. You take a little bit more off the table here, take a bit more of the table here, essentially. 21, rejection, maybe re-entered here. I think by the time you've done all this, right, I think your like break even would be somewhere up, you know, somewhere crazy like up here or something like that after doing all this stuff, you know, like your break even would be crazy. Like the profit on this would have been great, essentially. Anyway, so I mean, yeah, there's still re-entry and exit points available, right? Just using the 3-line strikes, rejecting off of smooth moving averages, right? So, and then, you know, leave at least 20% on the table until the flip, which is right there. This is pretty much like breaks out immediately, and it's on the 21. I probably would have gotten this straight away because it's really close to a bunch of moving averages. So that's just something to keep in mind. It doesn't always get there. So if we have a look here, I don't think it even touches the 21. Oh, it does. Bang, right there. But what if you miss that? So front run it a little bit, right? Just move it a little bit above, just a little bit above. And again, I'm not telling you what to do. Sorry, I should say this is not financial advice. I'm just saying this is what you would do if you were following this strategy. So there we go. First profit point, 10%. I mean, like, you'd just be riding this. Just be like, where do I take profit next? I don't know. Maybe the CM stochastic, if you can bring that up. If you can bring that up, that's over here, for example. Let's go back to that trade, August 21. Okay, so you got all these points here. You could have taken some profit if you wanted to. It's quite a few. Kind of was sucked, like, to take that much. But this was a good spot to take profit up here. CM stochastic up here, and bearish divergence. Just so you know, like, if you can add extra stuff, I quite like the TMA RSI divergence. Okay, it's a here, sorry, under Phoenix binary. So that's the one to click on. And so yeah, if you saw this bearish divergence here, well, probably a good spot to take profit, right? Which I actually quite like divergences on the RSI to take profit. For example, like if you saw here, that was probably a good spot to take some profit. That's stochastic, overbought, flip, bearish, to bounce off the 51. Yeah, kind of, it's a lot of things, right, to look at, I suppose. But I guess if you took some profit here, that lines up within the level already anyway. So, I mean, it's up to you where you take profit, but I recommend along these lines you take a little bit off the table as it goes up, and that's completely up to you where you deem is a good spot to take profit, basically, for this particular strategy. But I just like that, for example, this maybe didn't even get into a position here. So yeah, let's have a look here, like for this loss, that if you just went and got straight into it and went from candle to candle, it's a 20% loss. That's a fair loss, to be honest. And if you just use the Parabolic SAR for your stop loss, it's not as good sometimes as, like, for example, putting a stop loss just above the previous candle before the flip, say, for example. So in this case, that would have been here, down here. I probably would have given it like a full-bodied candle though for stop loss. But so instead of, because things like, what if it goes crazy, there's some manipulation, it flips, and then it goes straight down? That's a 24% loss. Consider this, right? Consider this. But also consider market manipulation. The reason why the Parabolic SAR is good is because if it flips and then something crazy happens, you're not stopped out immediately. But for this kind of candle, like, I would just put my stop loss probably here, above this, at the most here, and then just start moving it down. Here's an example of basically if you put your stop loss, you know, just somewhere a bit closer, would have been better. So there's the short there, it basically is right there, and then you would have stopped out 3% loss or thereabouts. Let's just say like around here. maybe put it here. I probably would have said, yeah, probably around here, something like that. It's 3% loss, basically. This was the halving. Remember back then? I don't know if you remember around the halving, just after the pandemic crash. It was like, I was in a bunch of groups and we were watching the price of Bitcoin, and then after the halving, and we're just like, what now? And nothing happened. The price went sideways for like a few months. It felt like a long time because we're just like, well, what's going to happen now? Like, the halving's happened, and we waited like a month. It was a bit, just over a month. Like, okay, I don't think anything's going to happen. But then this happened. So anyway, I think that's enough for this video. I'm not going to show my slideshow that shows all the extra things to consider, like risk management and all that sort of stuff for my day trading strategy, because to be honest, the day trading strategy stuff is a lot more high risk. This is a lot lower risk. Although, to be fair, you're talking about pretty big percentage moves, you know, in terms of both sides. The loss here, 8% or 150% less the profit that you take along the way. So it's never like 150%, you know, for example, like flip here, long here. If you've taken profit there, maybe you re-enter there a little bit, take profit there, sort of deal. And then maybe you close your position here and then retest. Overall, it's pretty good. I highly recommend this. I'm not telling you to do it, just saying it's worked for me. This strategy carried me throughout 2021 pretty much, and allowed me to kind of do whatever I wanted with the market and with DeFi and with all sorts of stuff. Where are we now? We're up basically on this, you know. I wish I took this. I wish so badly that I took this, because where are our profit points on 3-line strikes? Entry was there. Even this entry on the 200 period, not the 21. Didn't get to the 21. This is why it's kind of like, if you missed this, it would have been like, oh man. Even just like a little bit of a move. I don't think it even touched. This is the thing, right? This is the thing that can happen. This is what I was saying before. Maybe you should front run the moving averages. So say if you enter on the 200 because it's the closest moving average, give it like 1% worth of front run. Just, you know, just an option basically. But yeah, profit point. I don't know. There was no real exit point there. I guess exit for me would have been like either the flip or the fact that we weren't able to hold above the bull market support band. We broke out above it, weren't able to hold it, broke down below it, rejected off the 21. That is bearish. That is very, 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 very bearish. Nothing about that is bullish. Nothing about that is good. That's a break. That's a fake out, failure to hold key levels, rejection off key levels, wicks, trying to get back above it, rejection again. I mean, that's terrible. Very, very bad. If you didn't see this as bearish, then fair enough, but the PSAR flipped. So you are positioning for a short trade. And then where's the PSAR flip? There, 21's there, stop loss. I don't know, if you put it there, you would have been stopped out. That would have sucked. You could have re-entered here or here though, so no problems, but that's why you can't put your stop losses too short. Here would have been good, and just trail it down with every lower low. 200 period moving average, that was your first profit point. So here to here, 7%. And then, whoa, this is insane. Look at this. I mean, I'm sure you all have looked at this. Boy, you've all looked at this. 73%. Next 3-line strike. On 3-line strike, just so you know, again, this is from the TMA indicator. Next 3-line strike, 147%. Next 3-line strike. You had plenty of opportunities, 171%. Next 3-line strike. Maybe you re-entered here. Next 3-line strike, 176%. When you get this far away from the 200 period though, or even the 21, you're going to get mean reversion at some stage. So just expect that something's going to happen. There's going to be some sort of reversal at some stage, right? So, and then the flip, and then the 21, then the take profit at the 50, and then the take profit at the bear market resistance band or bull market support band, or the 3-line strike. And then we get a dump, failing to hold the 50, failing to hold the 21, rejecting off the 21, rejecting off the 50. Very bearish. Very, very, very bearish. But if you didn't see that, okay, flip, 21, moving average, rejection, 50, moving average, rejection. So entering here, bear market resistance band, rejection, back below it, failing to hold the 21, down. What are we up? 22%. Have we taken profit yet? I have at the 21 and the horizontal support and resistance line. Again, it's up to you where you want to take profit. But for me, right now, from the little tiny bit that I've got left, because again, looking at too much news and not really following things like exactly as per the strategy, taking quite a bit of profit off this, out of this trade, and that's okay. I've still got a little bit left. I'm probably going to hold on to this probably until the flip, I would say. maybe little bits here or there. Maybe a little bit. I did take a little bit today, the TDSS9, but after like just kind of reviewing and going over a few things, and you've always got to check yourself before you wreck yourself. It's always good to just think about your strategies and what you're doing, and just take a step back and analyze the situation and try and work out how you can improve upon things. And to be honest, if I just followed my strategy this whole time, I would be much better off than watching all the news and worrying about what Papa Pal is doing and all that sort of stuff. I mean, don't get me wrong, I know it matters in the grand scheme of things, but if you've got a strategy and you can mechanically follow it and you don't worry about the news and all that sort of stuff, you can have your trades where you do fundamental analysis. Maybe you have your fundamental trades, maybe you have your technical trades, and you keep them separate. That's something that you can do if you want. But yeah, in this case, this would be a purely mechanical trading strategy where you enter when you need to, exit where you need to, leave the last 20%, wait for the flip. If you're still in, you could either just close or wait for, the next point to take profit or re-enter or whatever. Look, to be honest, things like the 3-line strikes on the daily, I mean, I would watch those and follow those pretty carefully because they work really well a lot, except during consolidation. So this is a long-term swing trading strategy. We're talking days between each position, and you really have to have your nerves nice and calm for this strategy. This is an emotionless, mechanical trading strategy where you enter at certain points, you exit at certain points, and you don't care about your emotion. You don't quickly try and jump out or whatever. You don't look at lower time frames for this. You just stay on this, stay on course. If you've got a medium-term swing trading strategy, then focus that energy that you might have that is quite negative for this kind of mechanical trading strategy. Focus that on that, right? And just leave this go. Leave this in the background, right? Manage it, of course. You've got to manage it. You've got to manage all your trades, but be emotionless with this. You got to be emotionless with all trading. Let's be honest. If you've been in it for as long as I have, you lose a trade, you don't care. You win a trade, you don't care. It's just how it is. You kind of need to develop this, because as long as you know your strategy works in the long run, you just keep doing it. So for me, I've got this strategy on the go. I've got another one, which I have shown in previous videos, which I'll go over again on probably the next video, because I feel like these longer term trades are it's just more relaxing. You can just have it go and do your thing, and then it's just better. This is what I was doing last year, and it worked out for me. As you can see, it would have worked this year if I just added these extra little bits to it. So again, I've been doing this strategy now for 3 years, and I've only just added this extra level, this extra edge to it, which has made it so much better, so much better. So I'm really glad that I've reviewed this and revised it, refined it and improved it, because now I've got this for years to come. So I just realized I'm looking down at my screen, but you can't see it anymore because this is the wrap up, but I'm just anyway. So that pretty much is it for the video. Remember, not financial advice. If you like the video, please hit the like button, subscribe button, notification bell, leave a comment. I don't know, any of those things would be really greatly appreciated. I hope you got something value out of this, and if you did, please let me know. I would love to hear your perspectives on this particular strategy. If you think it works, let me know. If you think it will not work, because again, like, markets can change in the future. Maybe as more money comes to Ethereum, it will stop working. I'm not really sure, but this doesn't work with Bitcoin. Although actually I haven't checked it with the moving averages, but when I first started using the Parabolic SAR or the Martin Trend Trader, I was using it with Bitcoin, and it was terrible. It chewed me up and spit me out on the 4-hour. Terrible trade after terrible trade after terrible trade. Maybe with the 21 and the moving averages, it's better, but Bitcoin does a lot of sideways trading, and so it doesn't produce nice big trends, essentially. It just kind of goes sideways for ages, and then just kind of goes up and then sideways and then down and then sideways. It's not nice to trade for using a trend trading strategy, like a proper trend trading strategy. I mean, it's not as good as something like Ethereum or Solana or some of these other altcoins that also print much higher percentages. So you really don't need to do much in the way of leverage, which I like, because it means, like, for example, on Ethereum, I don't really use leverage. And it's like my stop loss, my liquidation is at like 15,000. Like, don't have any concerns with that. So anyway, thanks for watching the video. I will get around to my FTX trading strategy video that shows how you can execute trades from straight within TradingView, or even manage your trades using the quant zone. I'll get there eventually, but for now, I'm just enjoying these trading videos, and I've got a few more day trading strategies, but I'm gonna actually kind of zoom out a bit, right, and start focusing more on longer term stuff. I'm going to do my day trading stuff, which is crazy. I do have the Martin trend trader that I'm using on the 15-minute chart on Sol, but I've got the setting set to, instead of 5, which is the default, I've got the setting set to 2, but I don't know how to recreate that on the Parabolic SAR indicator, because I've flicked around the different settings and I can't figure out how to get it exactly 1-to-1. But the 15-minute Parabolic SAR Martin Trend Trader Code 2 actually works really, really, really well. I've been using it for things like, and then waiting for a retest of the moving average. I've been using it for things like Apecoin, Helium, the Graph, Solana, to get some losses, but as long as you have your stop losses set right, you should get some really good wins. Especially Helium. Like, that was crazy. The other day I got into this really good Helium trade. If I can figure out how to get those settings into the free Parabolic SAR indicator, I'll definitely do a video on that. But I got to do more tweaking and figure it out, essentially. So hopefully I can share that guy with you, because they're still pretty day trading. They're still very short trades, 15-minute chart. But anyway, it'd just be nice if I could figure that out so I could share it with you guys, because I have access to it, because I've got that indicator still. Anyway, have a good one. Peace out. All the best. And I'll see you on the next video.